Hi everyone, welcome to this week weekly market update. So as usual, let's see what happens last Friday closing. The last week what happens on the market itself, and then we will look forward to discuss what's coming up for this coming week and things to take note and be watch out on your profile. Your portfolio as well. And then subsequently we will be looking into certain counters, and then we also review and recap what we have done over the last week and to see whether any counter that hit our TP or SL as well. So before that, remember to follow my Facebook page, join my Telegram, and also like my YouTube if let's say you have not subscribed yet as well. So let's start. So on last Friday itself, right, we know that a couple of the indices actually they close lower, but doesn't mean it's it's not good throughout the whole week itself. Because like for S&P 500, like for Dow Jones, for Nasdaq, I think it's still performing quite okay. There isn't any drastic drop over the last week itself. But we know that Amazon shares actually slides badly. It gapped down on last Friday due to the earnings report. It's not that good, but ultimately, right? If let's say you look into the earnings itself for Amazon, right? Actually, it's not that bad. After all, it's a big company. It's $1 trillion company that is still earnings quite good in the earning per shares as well. All right, it's just that the revenue is slightly way off, but to me, I think it's totally fine. But based on what happened on the last Friday chart for Amazon, right? It's not that it doesn't look that good lah after all. So hold on. Let's take a look on last Friday for Amazon. So you can see it's a one huge gap down there. All right, from 3006 to 3003. After all, Amazon shares is quite expensive lah. Um, I mean, if let's say they are good, they actually can do some stock split, so they can actually have more small holder to join them as well. But with this large gap, right, will there be any chances of gap recovery play for the upcoming week? I think possible, but will they actually shine again back to the all-time high? I think it take quite a while. Right now we are actually in between all the time all way high and all way recent low, right? So I think that there is higher chance for Amazon to actually to come down slightly to this support area first. Then we will see where it goes. Basically on last Friday itself, right, there's actually high volume trading as well. So this is my view for Amazon. All right, so let's not to wave off too far apart. So last Friday, as you can see, the broad equity benchmark fell 0.5%, basically dragged down by consumer discretionary and energy sector itself. So you can read up from the news, but I think it's because of Amazon, the first quarterly review miss. So after the 3 years and weaker guidance going forward, when the company give weaker guidance, right, that means you have to watch out of their earnings for the upcoming few quarter as well already, right? So just be be careful. If let's say you're still holding Amazon, don't try to put inside your fridge and then keep praying that Amazon will be doing good. Yes, definitely Amazon is a good strong company, but I believe that if let's say you are holding profit, right, don't make your profit turn losses. You can actually sell now and then buy it when it get even lower, right, since they give weakened guidance, right? So then not only that, for this coming week, right, just to take note a few things, because actually there's a good earnings report. Not earnings report, as in there is a economy data coming up. Especially this coming week, economy data is quite significant. Why? Because actually the Powell, okay, Fed Chairman Powell on Wednesday said that economy has come the long way since COVID-19 recession. All right. So right now they are actually looking into whether want to taper or not on the purchase of the bond purchase lah. So right now this coming week is actually quite a significant a job report data. So as you can see, I think they write here. Right. Alright, so you see, Powell said on Wednesday he would like to see strong job report before winding down the central bank of 120 billions a month bond buying program. So right now, if let's say they taper, no free money is going to flow into the market. It's not immediately effect, but of course, it doesn't mean the market can't survive without this money. But the market will be much easier, much not that stressful with the money going on from the government itself, right? But because of investor, of traders, taking this as a bad news, they actually recover. Just sell out all their shares on hand or just want to take all their profit. This will actually trigger pressure to the market itself. Right? It doesn't mean the taper is a very very bad news because it show that market is good, correct? But ultimately, is what the trader and investor out there what they want, what do they expect over here. So this coming week, there's a lot of data. I mean, for the economy calendar side, basically, first is I think it's the unemployment rate and the non-farm payroll standard on the first week of the month, basically on the Friday, and also the initial jobless claim. All this big data, right, is a point for Fed to see whether they want to go into the taper or not. All right, so just just pay a close attention if let's say you worry about whether the market will zoom up or down, right? And not only that, for last week we know that China market the Hong Kong market has been dropping crazily due to the Chinese trade, right? I mean the regulations for the Chinese technology regulation sector, correct? It continue to hunt on them, and then right now a lot of people is thinking about catching the falling knife, trying to buy cheap, especially for shares like that actually fall too low, like the both educations company, right? One is TAL. So hold on for a while. All right, one is TAL. So TAL actually dropped very badly. Right now it's at $6. I think a lot of people is trying to pick some falling knife over here because it's fall that badly. We never see across this price since very very long ago. I think this is 2015. All right, so how badly will it fall? Is 4 months straight candle. All right, so a lot of people try to catch up falling knife. I mean, if you want, you can go into to nimble a bit, start nimbling a bit if you believe education sector is still important. Ultimately, I believe education is still important, but it's uh, Chinese government is going to pressure them again, how the company is going to restructure to make their companies to have more revenue coming in, because right now they stop all those kind of online subscriptions for the education itself. So if you want $6, it's a very very cheap pick, but of course low can be lower, but we never know. For people who has more risk appetite, right, you can actually try to nimble a little bit here. All right, and the earning report coming up on the August 5th of August, so just take note on that. This is the low right now for TL. Same goes to another company, which is EDU, New Oriented. All right, so both is the same lah because it's being played by the regulations of the China, right? So next thing, not just only that, a lot of big tech company will be actually affected as well. So we will look into it. So coming weeks, there's a lot of economic calendar ahead, which I just mentioned, right? So not only that, Tuesday there's earnings report from the biggest like Alibaba, the tech company. Right now, if Chinese regulation is pressure on tech, if let's say Alibaba is not performing well, like you see Amazon is not performing well, right? You will never know how badly will Alibaba continues. Like we'll look at the Baba chart later. And also resort MGM I mentioned on Las Vegas. We'll look into a chart. It's something how related in the same industry, right? So we'll look into it later as well. So all right, so this is the for the coming week, and then also this is the news Royal Caribbean, because why I keep talking about traveling sector, travel sector, all this. So I talk about CCL Carnival, right? So right now Royal Caribbean, the shares came down because of COVID cases finding their board, right? So this act as a bad news because cruise trying to recover back. Right now, it's got negative impact coming again. Of course, it's not very a good, not showing a very good sign, right? So you might want to be careful if let's say you are holding on any travel sector at this point of time. All right. So for earnings calendar, just now show you there are a couple of big technology like Alibaba, all these. So you might want to go to those kind of websites to see what is coming up on the earnings calendar. Then you might want to be, uh, monitor and be careful of your portfolio as well. All right, so next, let me go into the charting itself. Hold on for a while. All right, so next, let's look at the broader indices first before we go into selective counter and review on what happens. So last week, right, I mentioned on SPX 500, I say that as you can see, it's stated there, SPX has break all-time high, and if the candle able to hold and stay above 4,004, right, there's a high chance that the next resistance we are looking at. But of course, in right now, market is at all-time high. Am I right to say the market is at all-time high? In order for it to go even higher, right? It need more so-called more push from the market, correct? More evidence from the market. All right. But in the first place, earning reports is a good chances for the market to strike even higher. But when you go even higher and higher, the greed grow even stronger and stronger. People will tend to take profit and leave the market, right? Because it's too high. So right now we can see based on S&P 500, everything is still remain the same. I mean, it's still trading on the trend itself, the ascending up trend line. I say that this is the it might go into the middle of the channel itself. Correct? It might go to the middle of the channel. All right, so this is what we are looking at. You can take a look at the weekly chart. Okay, this is what we are looking at. But right now, right, if let's say you go to the day chart and you open up this thing called RSI. All right, so hold on for a while. So as you can see for RSI, right, the market is forming higher high. All right, higher of the previous high. But for the RSI, it's actually forming the lower of the previous high. So this is a divergence right now is forming. I mean, all along the way, right, you can see the S&P 500, right, there's a lot of divergence in between. There's a lot of divergence. There's a lot of bearish, what we call a negative or bearish divergence, bearish divergence, bearish divergence. But market is keep going higher and higher. All right, so there's a lot of hope. I mean, if you want, right, I would suggest that people who are more risk appetite, you can consider to short. All right, but people who are more risk averse, you can consider wait for the market to come down, correct a bit, and then you long. All right, so don't try not to long at all time high. I mean, it's a very very bad point at this point of time to go enter into the market. All right, especially when it comes to the August, you can look back at what happens. I think August the indices don't seem to perform well. I mean, you can't use last year to compare because that is the COVID try to recover, right? If you look at past 10 years data, you can see that August months is not performing well as well. So just be careful if you want to long at these junctions. Otherwise, I would suggest that wait for more pullback. All right. So next, we are going to the Japan's market. Just nice. So Nikkei 225. As I see, this is what when I chart. I think in June, I say that it actually break. Then we are looking for this line. What is this line, right? We can see based on moving average, based on the weekly chart. All right, this is what I draw previously. I say that since it has been supported, resisted by this 20-day moving average, so it might actually wait for the 40-day moving average to catch up. All right, it really hit right now. It break. So where are we looking at, right? Since we draw the Fibonacci level, if let's say it broke 23.6% by next week continue, we are actually by right we are looking for the next level 38.2. All right, 3.82%. This is how we use Fibonacci level, but I don't go into so optimistic yet. I mean, because the market has been the overall market, like for the Asia market, like Hong Kong, due to the regulations, it's not performing well, like China A50, all this. So for Nikkei, right? I mean, it's right now showing a very, mm, you can see that it's like so-called a descending triangle. All right, it's right now it's touching the support point. If let's say this point by next week is not going to show any support here, all right, then this is where we are looking at. All right, 26,200 or 26,000 if you want to have a round figure. It seems like a previous mini support here. So this is the line I'm looking at, 26,200. All right, if let's say if successfully broke below, then this is the first layer we are looking. Otherwise, we are looking at the second layer, which is the second Fibonacci level, 38.2%. So this is on Nikkei. For Nikkei, I'm more on the downside. All right, more on the downside. So I can just save this chart. I don't want to do anything. Basically, I just write first. Today is 1st of August. All right, so looking at 26,200. Otherwise, we are looking at 38.2% FIBO level. All right, so this is what I give myself note, and then I should monitor from there. All right, and see how it goes. I mean, if you want to short right now, it's up to you for your risk appetite. If you want to wait for decent pullback to short, it's also up to you. But I'm more on the downside trend. All right, this is how I look for Nikkei. Next thing we will be looking at Hang Seng Index since has been performing badly. Can you see that? But right now, I didn't draw this one. I draw previously one. So I did write the date when I draw it. So we can see based from the chart itself, right? It seems like it actually touches the support area, 25,000, and then it bounced back. Can you see that when I zoom? All right, touches, pump, and then it hit back. All right, so because a lot of people think that this is a dead cat rebounds, especially for like big company like Baba, Tencent, um, those kind of Ping Tuo Tuo, JD, they're trying to pick the low. They try to pick the low, but you never know when is the low. All right, if you don't buy now, you might actually regret it if the price jump up. All right, because when do you have the chance to like pick those kind of big company, like for example, Tencent, where the price actually reached that low in 4 to 423. This is like when? This is like 2020 April. right? 2020 April when it recover, COVID recover, right? So right now they try to buy and it's actually showing a significant support and resistance, or so-called a resistance turn support at this level. So kind of it's very close, right? Resistance turn support. So a lot of people trying to do some falling knife pick, but take note, I won't suggest unless I have more significant signal showing up. All right, I just put this is like gambling. Right now, you're gambling big or small. All right, so for me, I won't go into it. All right, so next counter, I'm going to review. It's actually QCOMs I mentioned, right? If you have following, see 25th July, I think it's last week only, break above 145. All right, break above 145. So you break above, if you buy, use the stop entry order. If you break above, you should able to ride until 151. That's like a $6 bucks. But where I'm looking at 160. Hopefully you'll recover the gap itself. All right, so this is what I'm looking. Congrats people who enter to QuadComs. And then the next one is LVS, which I mentioned, just a recap. So LVS, what happens? Let's look at weekly chart. So a weekly chart, 18 January, I mentioned. Last week I also mentioned I did right. I shared a chart if I'm not wrong. So this is last week, 18 January, is somewhere here. One candle all the way down, second candle all the way down. All right, so it's hitting my target 38.40. If you, let's say you have managed to enter, congrats to you guys. Continue to hold short, and especially market is all-time high. LVS is not doing good, where the market overall broad index is dropping. I think this will drop even more. Okay, so and with the spike of the Delta variant cases, I mean, in finance sector, we could see that it's good or bad. We can't curse at why or got this all this virus causing the market to drop. Correct or not? I mean, I'm just focused based on the chart itself. Political side, social side is not for my concern at this point of time, right? So market go up and down is regards whether the COVID cases or regards due to company is not doing good. If market down, we short. If market up, we buy. That's all. All right. I'm not happy because of COVID cases spike, not because of Delta virus cases spike. I make allow me to make money from this bad news. No, no, no. I'm just doing based on technical analysis. All right. So next thing we are looking at. Let me see. All right. I think we'll be on Pfizer. All right. This is what I shared as well. So Pfizer managed to hit my TP level. So that managed to hit my TP level. I see it break out. You might recover to the all-time high, right? And it successfully break and then it touches. All right. See, I draw so ugly, but I did delete lah. I mean, I didn't remove it because I just want to see this is what we are looking at. All right. Sometimes I don't delete all my chart. All right. The next one is actually on DAL, and people who don't believe, I don't know what to say. Right now, it's actually trading with the support and resistance level. Right now, it's closing below the support level. This ascending trend line. All right. I'm looking for 35. Still the same. I'm still looking for 35. See how it goes. All right. This is for DAL. All right, so let's recap on some tech company, Chinese tech company. Why I say it's kind of like they might showing some dead cap bounce because first Pinduoduo at a weekly chart is right now being supported by 100-day moving average, high volume. All right, next it has been dropping since $200. I mean this Pinduoduo is quite a significant good company, quite a good earnings due to regulation played. People who want to buy cheap, I think this is quite a good time to nimble a bit. But of course, if let's say this by next week still give way and it's $70 is still give way, then we are actually looking more bearish over here. Otherwise, right? Otherwise, here will be a good significant support for Pinduoduo. All right, JAD is also showing some support there. All right, can you see 100-day moving average on the weekly chart touches and bounce up. So, but however, for another tech company for Chinese, Baba, it doesn't show that. All right, it touches and it close straight. Why? Because there's an earning report coming up, right? And also Alibaba got fined, right? So right now, I think compared to Tencent, Pinduoduo, JD, Baba is quite among the rest. Should be the weakest lah. So we will see how's the earnings result for the quarter come out. All right, so that's all for this month's sharing. There isn't any new counter that I will bring up. So we'll just continue to hold and then we'll continue to recap and monitor once again. All right, thanks you guys for joining me. Enjoy your weekend. Bye bye.